Most investors are asking the same question right now. How do I make confident decisions when the rules have changed and the landscape feels unpredictable? The truth is that confidence comes from understanding, not from perfection. Today, I'm walking you through the same playbook that most successful landlords and investors are using to build their steady returns going into 2026. Hi, my name's James Donohue, and I'm the founder and managing director of Landlord Property Exchange. We work daily with buyers who want to make strong, informative decisions in a market shaped by the Renters' Rights Act, rising compliance expectations, and shifting regional yields. This video gives you the structure that keeps investors safe and consistent when it comes to crucial decision making. Most typical landlords and investors go straight to Rightmove or deal lists. The successful ones, however, start with three crucial questions. What return do I need? What risk am I comfortable with? And crucially, what timeline am I working toward? When you are clear on those three crucial points, the whole market becomes easier to interpret. You stop chasing deals that look attractive but do not suit your specific goals. You stop comparing properties that cannot deliver the outcome that you crucially want, and you start filtering opportunities based on what fits your path, just not what appears online in front of you. Investors who start with a strategy do not waste time. They make cleaner decisions because the deal either fits the framework or it simply doesn't. The Renters' Rights Act does not make buying difficult. It makes buying clearer. Because sellers are now encouraged to share the real picture early, you get more transparency on the tenancy, the rent behaviour, and the condition of the property or portfolio than you did before. Here is what strong investors are crucially looking for right now. They look at how the rent behaves over time, not just the headline figure. They look at the relationship between the tenant and the property. That tells you far more about the long-term performance than any brochure could. They look at the rhythm of the tenancy. Does the tenant stay on top of payments? Are there any patterns? Is the communication reasonable? Ultimately, you do not need a perfect tenancy. You need a tenancy you can understand and crucially manage. Clarity is more valuable than flawlessness. When something is unclear, ask early. That is what separates confident buyers from those that are overwhelmed. Headline yield is becoming less meaningful. Investors are now focusing on the real yield, the income the property actually generates after you understand the tenancy, the costs, and the stability of the arrangement. Strong investors focus on the consistency of income rather than the size of that headline return. They want predictability. They want reasonable operating costs. And crucially, they want a tenancy that behaves in a way that they can rely on. And here is the advantage of 2026. Because sellers are expected to present more clearly, you have more data to assess than you ever had before. Yield becomes reliable when the story behind it is more understandable. Most investors assume imperfect paperwork is a red flag. It's not. It's perfectly normal. A gap in documentation is not a problem when the seller can explain it. A tenancy with a bit of history is not an issue when you understand the story. The real red flags are discovering surprises late in the sales process, information that contradicts itself, or numbers that just simply don't match the tenancy behaviour. When the picture is honest and early, even with imperfections, you can make a confident decision. This is how investors protect themselves in 2026. They look at clarity, not polish. They look at patterns, not just simply one-offs. And they look at the reliability of the income, not the tidiness of the paperwork itself. Here is the structure we see successful investors using right now. They begin with strategy, not the stock. They assess their tenancy and the income before they look at simply the internal decor or the presentation, and they focus on real yield rather than the headline yield. They interpret documentation as part of a bigger story rather than expecting everything to be perfect. And they ask early questions rather than waiting for surprises later down the line. This is the framework that allows investors to operate with confidence in 2026 when investing and purchasing tenanted properties. If you want clarity on a deal you are considering or you want help interpreting a tenancy, subscribe and ask your question below. Next week, we are looking at why off-market deals are rising and how to use them to your advantage.